Welcome to the Advanced Order Flow Trading course. In this course, you will gain an elite-level understanding of the theory and practice of order flow tools. To understand why you should care about order flow analysis in the first place, we need a few basic ideas. We begin by differentiating primary and secondary information, which is an important intuition that seems to be lacking in most retail traders. Primary information refers to the fundamental forces that form a market. For example, imagine the oil market. Primary information relates to the real-world variables that impact oil prices like OPEC production, geopolitical events, technological advancements in exploration and extraction, maintenance and release of strategic oil reserves, and so on. The list of variables impacting oil prices is large, as is the case with any other market. This is the stuff that will actually change the oil prices. The oil price you can see in your chart is the aggregation of all these variables, and it forms what is called secondary information. You can also see secondary information as the information that the market itself generates, meaning price and volume. Notice that a large number of variables are compressed into a few variables, so there is an enormous loss of information when we analyze secondary information. This is the problem of technical analysis as a whole. No matter how good your analysis methods are, it's always imperfect because price action and volume are secondary information, which means they reflect the market in an opaque way. Even if you had a perfect trading technique, the result would not be perfect because what you're trying to analyze is imperfect. Most traders already know that price action analysis is perhaps one of the most reliable forms of technical analysis, but volume is known to be problematic. I already talked about the problems of volume in my free order flow course on YouTube, so make sure you check that out if you haven't already. You can view order flow as a detailed breakdown of volume. That has tremendous consequences. When we integrate price action with order flow analysis, we can dramatically increase the precision and timing of entries and exits in comparison to the use of price action in isolation. Price action is great, but since it's secondary information, it also lacks transparency. Order flow enters the scene to make price action analysis more transparent, although volume is also secondary information and it is also incomplete. When it comes to the technical analysis of the two main forms of secondary information, this is the best that can be done. In other words, you can see the integration of price action and order flow as an enhanced version of price action analysis. More transparent, more accurate, and more logical than price action analysis by itself. You can also see order flow as the missing piece of the puzzle that makes the technical analysis of secondary information as good as it can be, although it will never be perfect due to its incomplete nature.